you a little Pennsylvania Act 511 tax update for the 2022 tax season, what you need to know. The main local taxes in Pennsylvania outside of Philadelphia that we deal with are the earned income tax on earned income, obviously, the pesky and nuisance tax, the local services tax, that little nuisance one there, and the gross receipts tax, business privilege, or mercantile tax, which now has a limited application of about 270 jurisdictions. We'll talk more about that. The main impetus over the last 2 years has been COVID. And what COVID did is established all of these remote workers, and none of these taxes has anticipated this or built into the system something that was really intentionally responding to the remote worker situation. For EIT, we have the 90-day rule, which was established by Act 18 of 2018. Back in January 1 of 2014, Act 42 became implemented to identify triggering nexus for business privilege tax. And local services is primarily a matter of where the employee is performing their service and what local jurisdiction would be responsible for providing emergency services to that particular individual. So let's review and see how these are going to impact us. EIT has the 90-day rule. P.S. Never dreamt when we were drafting this thing back in 2014 when we first drafted it, never were we thinking something like COVID or a pandemic would come. As a matter of fact, we didn't even think of it in terms of those aspects. We were just trying to create a simple safe harbor work location guidance for the employer because Act 32 was directed primarily to the responsibilities of the employer for determining that non-resident worksite location that would be applied. Again, reminder, the general EIT rule is employer must withhold the higher applicable rate of the non-resident rate where the employee works or the resident rate where they live. So come March of 2020 and COVID and the stay-at-home order by the governor, millions of workers throughout the Commonwealth lives changed. So while Pennsylvania has the convenience of the employer rule, earned income tax, local earned income tax has the 90-day rule, but either way, the onus is still on the employer to control designating the work location. So if the employee is permanently or even indefinitely assigned to work at home, the employer could have resolved a lot of this simply by changing the applicable worksite rate for the employees in the payroll system around late June after the 90 days would have rolled. Everything would have been fine. The problem is almost no employers actually changed that except for employers in Philadelphia for their own reasons. And this created a W-2s being generated that probably looked at the physical presence or office location as the work site. Now, as we did our 2021 tax season for 2020 tax year, there may have been clients who wished to claim their home location as their work location for local tax because maybe of a preferential rate difference where they could look at some refunds, or there may have been a claiming of expenses for working from home. And there is going to be this necessity to verify this home assignment by virtue of a letter from the employer. Now, the same applies to self-employed people. I was speaking to Keystone and Berkheimer. They would probably be looking for that letter for the self-employed individuals as well. So here is the recommended checklist of gathering as you sit with your tax clients or do their information. Know what TCC is and who their collector is. Understand the concepts of temporary versus permanent and what is a necessity for them to work at home versus a convenience, how that might play into the determination. And oh yes, if they're claiming a refund or deductions for home office, you're almost certainly going to need that employer letter. Now, Hurricane Ida hit. It took a toll back in 2021, and the federal government provided some relief by extending that October due date all the way out first to January, then to February 15th. What happened then, Pennsylvania Department of Revenue also was matching those dates. And as far as we know, at the very least, Keystone and Berkheimer have acknowledged also extending those IDA dates. So by February 15th, the 2021 tax year payments and filings should be wrapped up. Well, payments go back to the original due date. Now, with regards to LST, look at where the employee is working and where they would have access to emergency services. Understand and recognize there will be cross-referencing between the earned income tax collector and the LST collector if they're not the same collector, to see that location again, and be prepared to have correspondence if you don't make those adjustments. And then, oh yeah, BPT. Uh, the Act 42 of 2014 established a 15-day rule for which, if goods are delivered to or services rendered within a jurisdiction for all or part of 15 days or more, then there's a determination of a nexus requirements to register in that jurisdiction and probably file for recognizing any potential taxable receipts. The BPT tax collectors had their annual meeting in October of 2021, and they talked about ways of identifying where business is being conducted, what businesses are being conducted, what gig or side economies have been established or non-traditional, whether it's Ubers or whether it's delivery services, food delivery, other types of things like that. So again, another checklist recommended with your business clients. Consider a business activities questionnaire to kind of document where they're doing business and how they're responding to that. Advise your clients that maybe they should have a company-wide policy to know where their employees are, and how, so that'll help establish nexus issues. And again, know where the jurisdictions are that have a business privilege tax, where those things might pop up for your clients. Again, I'm Jim Newhart, CPA. Reach out to me through our organizations. Hope you have a great tax season. Thanks.